If your car insurance renewal made your jaw drop this year, you're not imagining things. Rates jumped roughly 20% nationally over the last 2 years, and full coverage now averages around $2,400 a year. But here's the part nobody tells you. 2 drivers on the same street, same car, same record, can pay wildly different prices, sometimes double. Insurance pricing is not a fixed number. It's a quote. And quotes can be negotiated, restructured, and shopped. In the next 9 minutes, I'll show you exactly how to cut yours, honestly, without dropping coverage you actually need. Full coverage isn't one thing on your policy. It's 3. Liability covers damage you cause to others. Collision covers your car in a crash. Comprehensive covers everything else. Theft, hail, a deer, a falling branch. If you don't know which of these you're paying for, you cannot shop smart. Pull up your declarations page right now and find those 3 line items plus your deductibles. We're not cutting coverage in this video. We're cutting waste. But you can't spot waste in a policy you've never actually read. Insurers reprice your risk every renewal, but they also bet that you won't shop. That bet is called price optimization, and loyalty often costs you. The single highest impact move you can make is getting 5 quotes side by side. Not 2. 5. Mix 1 big national carrier, 1 direct writer like Geico or Progressive, 1 regional carrier in your state, and 1 independent agent who can quote multiple companies at once. In testing this myself and with viewers, the spread between cheapest and most expensive on identical coverage is routinely 40 to 60%. Moving your collision and comprehensive deductible from $500 to $1,000 typically cuts those premiums by 15 to 25%. That's real money, often $200s to $400s a year. But only do this if you genuinely have $1,000 sitting in savings you could hand over tomorrow without flinching. If you don't, keep the lower deductible. The whole point of insurance is that a fender bender doesn't become a financial crisis. This is a math move, not a bravery move. Run the numbers on your actual savings before you touch that slider. Carriers stack discounts, but they rarely volunteer them. Ask specifically about paperless billing, pay in full, auto pay, low mileage if you drive under about 7,500 miles a year, defensive driving course completion. That one is often a real $50 online course worth $100 to $200 off, and affinity discounts through your employer, alumni group, or professional association. Bundling auto with renters or homeowners is usually the biggest single discount, often 10 to 25%. Read the list of available discounts on each quote and ask in writing why each one isn't applied. Telematics programs, the apps that track your braking, speed, and phone use, can save careful drivers 10 to 30%. But they can also raise your rate if you brake hard, drive late at night, or commute a long distance. Be honest with yourself about your driving before opting in. If you're a calm, low-mileage driver who doesn't touch the phone, enroll. If you're a delivery driver, a night shift worker, or someone who white-knuckles the brake pedal, skip it. Some programs only offer discounts, no penalties. Those are the safer ones to try first. 2 factors push rates up that most people don't realize they can influence. First, credit-based insurance scores, legal in most states, and improving your credit can lower your premium meaningfully over 6 to 12 months. Second, coverage gaps. Letting a policy lapse even a few days flags you as high risk for years. If you're between cars, ask for a non-owner policy to keep your continuous coverage history intact. These are slow moves, not overnight wins, but they compound. A year from now, future you will be paying less for the same coverage. Here's an honest rule of thumb. When your annual collision and comprehensive premium exceeds about 10% of your car's actual cash value, the math starts to break down. On a 12-year-old car worth $3,000, Paying $600 a year for collision means in 5 years you've paid more than the car is worth, and the insurer only owes you the car's value minus deductible. Drop to liability only on older, paid-off cars. Keep full coverage on newer cars, financed cars, and leased cars where the lender requires it. This isn't advice for your specific situation. Run your own numbers. Put this on your calendar 30 days before every renewal. 20 minutes. Once a year. Step 1. Pull your current declarations page. Step 2. Get 5 fresh quotes on identical coverage limits. Step 3. Call your current insurer, tell them the lowest quote, and ask them to match it. They often will. Step 4. Confirm every discount is applied in writing. Step 5. Switch or stay, but never auto-renew without checking. Drivers who do this routine report saving an average of $300 to $700 a year, every year. It's the highest paying 20 minutes on your calendar,